If you've got any questions for me or our guests, email them to switzer@switzer.com.au. And you can also follow me. The Twitter handle is @PaulRicard17. On the back of a big rally on Wall Street, the Australian share market sailed back past the 6,000 mark, closing 27 points higher at 6,011. Wall Street took heart from a Senate Budget Committee approving the company tax plan and the confirmation hearing of incoming Fed Chairman Jerome Powell, who alluded to an accommodative stance on monetary policy being maintained. Does this move mark the start of a Santa Claus rally, and will the Australian market follow suit? I'm pleased to say Rudi Filapek-Vandyck, editor of FNArena, joins me at the desk. Rudi, welcome to the program.
Well, I'm filling in for Santa Claus now.
So, are we seeing the start of a Santa Claus rally?
It depends. It depends on your definition of what exactly constitutes of a Santa Claus rally. But on a very narrow definition, that you take the second half of the December month, Australia is the only share market in the world, and this is backed up by other people's research as well, pretty much every year delivers a gain in the second half of the December month. I remember vividly, even in 2007, where we were at the very beginning of a very nasty bear market. Even then, in the last days of the December month, the market would post gains. So, I mean, in general terms, I think there's two things that stand out here. One is, it's a US bull market, and the Australian market sort of gets pulled along in the slipstream of whatever happens in the US. And you can see it today, for example, the US gets very excited about potential tax cuts, and in the Australian share market, companies are rallying that have no exposure to tax cuts in the US whatsoever. So it's a pure sentiment thing, but that's by the by. I think more important here is the fact that on my observation, I'm definitely not the only one here, a lot of the small caps and mid cap stocks that have done the hard work so far, they look a bit stretched, let's put it that way.
So I want to talk...
And then, of course, before I think the big question here is this the beginning of some rotation, or maybe inclusion of the large cap stocks in the market? And in that case, we could potentially see a market that, yes, that pushes the index much higher, because those large cap stocks have a much bigger weighting in the index. And so far, we've gotten to 6,000 by the ones who actually represent the lowest weighting in the market, if that makes sense.
So I did crunch some numbers, Rudi, before that. So the Small Ordinaries Index, which is stocks numbers 101 to 300, year-to-date up 16.6%. compared to the broader market's 10.57%. That's the accumulation index. But even the ASX, the top 20 stocks are only up 6%. So they're really lagging the market.
Exactly. And that's basically what I was alluding to as well. And those numbers, you can make them for this year. You can make them since the beginning of 2016. You can make them since the middle of 2012. I mean, it's the same pattern. The hard work, the big returns in the share market have basically been amongst the mid caps, the small caps. That's not always evident from those indices you mentioned, because, for example, the all ordinary small caps has a lot of smaller mining stocks, and they don't always participate, but they have now. So I mean, I agree with your stats for this year, and definitely for this rally. We've seen also since October, from the 1st of October, that money started flowing in the market, big rally, and it was predominantly the A2 Milks, the Appens, the WiseTech Globals, the integrated research, and etc. And it wasn't so much about CBA and Telstra and IAG and the likes. And maybe if sentiment, because that's what we have to realize, it's an American bull market, and we're
just following.
And we sort of get sucked along. So as long as they keep on doing the right things, and they keep on positively going into the new year, we probably will do the same thing, but we probably have to rotate into large caps now, and that might be the story of December.
And so what could get people, or fund managers in particular, more excited about the large caps? We've sort of, the AGM season's come to an end. We sort of, are there any triggers out there that could suddenly
No, I actually think it's simply a case of they still have a lot of cash. if sentiment stays positive, they'll probably go for the laggards, and the large caps are the laggards. I think it's really that simple.
Okay, let's talk about some of the so-called value stocks, and maybe some of the large caps, because they haven't really been able to grow much, are almost seen as value stocks. A little bit out of vogue. One that comes to mind is CCL, Coca-Cola Amatil. Last week, a little bit of a, I wouldn't say an earnings downgrade, but just said it was going to reinvest some money into its Australian business. But it's now yielding close to 6%.
It is.
So is that value, or is that the classic value trap?
I think it's more in the value trap case. I mean, we should all realise that, I often use, well, not often, but I used, there's a couple of stocks like a Flexi Group, like a Coca-Cola Amatil, which nowadays I'm using as an example of a long-term downtrend. And you can, if you take you go back in time 5, 6, 7 years, and you take price chart, you can see immediately what I'm talking about. I mean, it starts at the wrong side of the chart and it ends up at the wrong chart. If you're a shareholder, exactly. So, of course, in between you have these short-term rallies, and it may well be that Coca-Cola Amatil and Flexi Group are both going to participate in this rally, because ultimately people are going to put money with laggards and try to participate. But if you take a middle to long-term view, there's no denying that those companies are still in a long-term downtrend, and it's still the question whether they will get out of it. And I would think, as a longer-term investor, yes, the yield is there in both cases, but the yield also indicates that there's the risk. That's why the yield is that high, and I don't think people often realize that that's how it works. I mean, the yield is not there to give you a higher return. The yield is there to point out to you this may not be a good case.
Coke is has a payout ratio of about 85%, and they say they can continue that. But let me go to some stocks in a long-term uptrend.
Yes.
And the question is, when do you take profits?
Yes.
Cochlear are trading at a price earnings on next year of about 43 times. Financial year 19 about 36 or 37 times.
Yes.
Just keeps going up. It's off a little bit today, but what do you say to people who are lucky enough to hold Cochlear and CSL?
I hold those stocks. If anything, I might take a little bit off the table, but I would definitely not sell those stocks. People forget, and often experts and commentators don't really explain this correctly as well. A PE ratio is not simply a multiple on next year's profits or the year after that. There's also an element in there, a very important element of reliability, of track record, of legacy, of the comparison between the rest of the market. And those stocks really stand out. If any sector since 2007 has completely outperformed the rest of the market, it is healthcare.
It is healthcare. It's massively outperformed every other sector.
Exactly. There's like a Grand Canyon between healthcare and the other ones. And it's not just because we all like people getting older and ending up with more ailments and diseases, but it's also those companies are high quality, often have the number 1 or number 2 position in the world. And with a rare exception, Cochlear has had a bad year in the past, here and there. CSL also, but that's a long time ago by now. Usually, the very low chance that they have to issue a profit warning is now translating into a high multiple, a high premium. Now, are the premiums high? Yes, they are. Are the premiums high not only to the market but also to their own historical premiums? Yes, they are. So they might come back at some stage, but I would still argue that those premiums are not going to go anywhere in the 5, 6, 7 years ahead. So
the trend's your friend is what you're saying on those stocks.
Absolutely. And don't sweat the small stuff. I mean, yes, as we've seen sometimes, 10-15% can come off those share prices, and it's anyone's guess when that happens. But I would comfortably predict at this point in time they'll make up for that plus some more if you just stay the course. Okay.
Finally, we've got just some stocks that you're watching at the moment, Rudi?
Yes, there's in particular in the smaller mid-cap space quite a few stocks that all of a sudden have a lot of weakness going on, and that can be people taking profits or maybe large fund managers going like, I'm out for the time being. Stocks caught my attention recently. Class definitely dropped way.
That's the provider of software to the essentially the self-managed super fund.
Dropped way too far. First a rally way too high, now a fall too deep. Webjet definitely fallen too far. That's why it's picking up now. Other stocks, integrated research, for example.
So what did integrated research do? Just to
They help. They're number one in the world, by the way. They help businesses with their operational efficiencies. So basically, say a business like this is what you should improve upon. They have a lot of very large multinationals as a customer. And one of my personal favorites, Technology One, is doing the usual after the result blues. So they just pay out the dividends, and now nobody wants to own them, of course, so they're falling. I would think that's an excellent opportunity to top up some more.
So Technology One, Class, with
Integrated research
were three you named.
Yeah. And I mentioned Webjet as well, but that's just me.
And we'll write down.
Sometimes the market goes a little bit crazy to the downside, as they do to the upside.
Okay, we'll write down Webjet as well. Okay, as always, Rudi Filapek-Vandyck, the editor of FNArena. Thanks for joining us on Switzer.
You're watching Switzer on Sky News Business.